Hey, good morning, traders. It is Steven with tradesplan.com. It is Friday, January the 7th. We're going to look at the overall market like we normally do on Fridays, and then we're going to look at the top ETFs of the week. So you'll have to excuse my voice. We're just going to soldier through this. So let's start with the S&P 500. Is definitely looking better than the NASDAQ. I'm going to show you a couple things, a couple other charts regarding the treasury yield that is showing you what kind of inflationary environment we're in. But you can see, the market pulled back really hard on Wednesday, got absolutely slammed. S&P is still found support at the 50-day moving average, which is solid for the S&P 500. NASDAQ is a completely different story, which is just kind of more proof that tech is probably going to continue to be out of favor for a little bit, or at the very least, I would definitely make sure you add some of these inflationary indexes or excuse me, industries that we're going to talk about here in a minute. Make sure you're kind of trading those versus all these tech that is getting kind of chopped around and spit out, because it's getting very challenging. So the S&P 500 looks good, but we are coming under some pressure. So at this point in time, we'll just have to see if it bounces, right? It can bounce out of here, or it can kind of bounce and then come down. And honestly, I know people don't like it when I say, hey, it might just be best for the market just kind of flush out. But if the market does flush out and kind of runs these stops, it might actually be healthy for the market. It might make it for the next easier uptrend. It might make the next uptrend easier. Whereas, especially for tech stocks, whereas right now, you have this, right? It's looking really ugly, and I thought that the NASDAQ was looking really good on Tuesday, or excuse me, after Monday. You had a nice cup of the handle pattern. You had a pop above the 50-day moving average. Everything looked good. A light pullback right here, a 1% pop right there, and then boom, right? It just got taken out to the woodshed. So that's why, like, even though, like, on this day, which was Monday, I was completely bullish. I was sold. Everything was looking good, and the market opened up a pinch and just immediately got slam. So it's important to be willing to change your opinion at the drop of a hat. And that's why I usually don't make predictions. I say the market's bullish right now, the market's bearish right now, but it can change in a day, right? It's also when the market is going straight down, I never get too bearish, because I'm like, we are one day away from a signal, right? So just be willing to bend with the wind. But right now, even though I'm sure there's some good-looking opportunity, and I could make the argument that you're at, horizontal support around the 200-day moving average, around all these lines for the NASDAQ. The stronger index is the S&P 500, and that's because it has financials and banks and more inflationary stuff. Now, I want to quickly show you a chart of the 10-year Treasury yield. This is honestly a thing of beauty, right? This is a uptrend, a cup with handle breakout. That is a really good look. If this were a stock, I would be all over it. I would say this is a beautiful pattern, right? Let's kind of go back just a little bit more time so we can get a bigger picture, right? And that means short-term and honestly long-term interest rates are going up. So you have a nasty sell-off, right? 2020, we all know what happened there, right? And then interest rates really bounced, and then it created a pattern, and now that pattern is breaking out. And we can honestly go to the 30-year, and even though the 30-year hasn't quite raised as much, right, and you can say that this might still need to, the longer term still needs to kind of break out of the downtrend. Maybe it's on the trend line, but either way, when I kind of go back and I look at the 10-year, I'm like, man, that's a really good chart. And this is a really bullish pattern. I could draw it right there. Cup, handle, breakout. So what is highly correlated, and this is the first consolidation, by the way, and those are the ones you want to buy. You want to buy the consolidations after the first leg. You want to buy that first consolidation, that first breakout. Now, what does that mean? That means inflationary, right? That means banks are usually a lot more correlated with interest rates, because rising interest rates means banks make more money. So let's look at the top 10 to see if we can kind of get that. Look, it's just filled with, look at this. Look at the top 10, energy and banks. Energy and banks. That's all it is. It's oil, MLPs, oil, MLP, energy, bank, nat gas, oil. So let's just start at the top and look at this, right? And they're all looking good, by the way. And I think you need to buy something, right? That is at this IEZ is at a trend line. Okay, so this trend line is about to break out. Now, usually when I am, let's say when oil is going up, and I'm trying to be like, okay, there's 10, 20 oil ETFs out there. Which one to buy? I usually buy the first ones that break out. I usually buy the strongest ones. XLE is looking very strong, is already at a 52-week high. The only reason I didn't buy this one is because it is I believe market cap weighted, which means there is a high weighting towards very specific stocks. But I did buy this one. I did buy IEO on this day, and it is excuse me, broke out of a downtrend. You have a inverse head and shoulder pattern right here, and with the neckline right here. So the day it broke, this day right here, when it moved higher, just barely above the 50-day moving average, I took a trade because I'm like, hey, I can just put a stop right under here, right, and not lose that much because it was a big volume day, and so far it's working out. So this one looks pretty good. It might pull back and create a handle, whatever. I just, there's so much evidence out there to show you energy wants to go higher, right? Broke out of here, broke out of this neckline. It's at an all-time high. XLE hit a 52-week high, right? So there's plenty of evidence. Now, if you didn't buy last week when I said to buy, they're kind of already getting extended, right? This IEZ is close to breaking out, so that's probably close to being in buy range, or you could always buy it with just a tight stop, but you might get shaken out. This XLE, we'll kind of go through these. I think this needs to pull back just a smidge, right? Maybe to the 20-day moving average, which is the pink line, and that 20-day will catch up pretty quickly. But I probably wouldn't chase it here, because I think if you chase it here, you could, but you're going to have a 7-8% stop, maybe even down below last Friday's bar, right? So maybe just a small retracement, and then I would jump on it. Now let's look at nat gas. Nat gas is also looking pretty good, and it looks a lot like the IEO chart. You can see that it broke out, right? Inverse head and shoulder pattern, neckline right at the 50-day moving average. Looks a little bit more volatile, but they all are. But I don't know if nat gas made a parabolic move last year, and some of these nat gas ETFs, I mean, they really, I mean, just look at this right here. I mean, if we look from January, $8 to $20 where it peaked, I mean, it made a big move. All right, it made a big move. But so this one, I don't know. I just kind of like IEO better and the XLE better. But you might want to pay attention to this one too, because if it does pull back a little bit, you could buy it closer to the 50-day moving average with a stop under last Friday's low. I think that's where you want to go, because if it falls down, if I'm wrong, or this trade doesn't work out, which I'm already raising my stop to break even, but if the trade doesn't work out, and you don't want to let it fall below this line, right? If it breaks this neckline, you want to pick a pivot and get out, because if it breaks below that, it's coming down here. Okay, just kind of keep that in mind. Let's look at MLPs, and then I'll look at banks. MLPs, it's kind of amazing how much dividends these instruments pay, but this is looking interesting too, with it's right at the neckline. Now, if you wanted to buy, you could, and put a stop right under 35, because see, this 20 is coming up, this 50 is going to come up, and this 200-day, I would expect support right there. So if you like the MLP, you like the dividend play, I think you could buy it with maybe a stop at 34.90. Now, you have to keep in mind, I'm saying, hey, you can buy this, you can buy that. Oil has a big headline risk. It gets hit harder than individual stocks when there's talk of an economic slowdown due to the COVID variant. It's gonna get hit a lot harder, kind of like it did right in here, right? It was already in a downtrend, and then it really started to accelerate. Maybe I can find a better example, but maybe I should go to USO. I mean, you can see right here, this is when some Omicron news hit, right, on November 26th. I mean, this was down 11%. So you have to keep in mind that if we have a major scare, which I don't know what could be more scary than the 1,000,000 cases per day we're hitting right now anyways. I know I'm in Arkansas. We absolutely smashed January 2021's record, right, already. I think last year our record was 4,500 cases for the whole state daily, and yesterday we were at 7,800. So the cases are smashing, and oil is coming back. So maybe oil is not as scared, but I'm just telling you, if some new news breaks with energy, oil is going to be what gets hit the hardest. Okay, so there's that headline risk. But I think you need something. I think if you are looking to trade when and you trade weekly, I think you need to be adding these inflationary trades to your portfolio, especially if you add a bunch of tech and other stuff. So looking at this right here, KRE. Look, I mean, and what's interesting is this looks like a cup with handle too. Look, you got a cup, you got a handle, boom, breakout. All right, it's kind of funny, and I could lay that chart on top of this chart. I got a cup with handle breakout, and then I do this, and I drew the cup. Now the handle's high, and it's not perfect, but it's funny how these charts are correlated. So if you believe in the cup with handle pattern, which I do, I think it is my favorite pattern by far. I've probably made the most money off that pattern, or at least one of them. Then you need to go long in situations like this. Start finding some individual banks. You can go to this ETF and look at the fact sheet. Just Google KRE ETF fact sheet. I do that all the time. Right, when I see an ETF that's moving, I say what stocks are moving that ETF, and I go Google the fact sheet and look for the best looking ones. But so this one right here, it's kind of extended. I'd maybe see if it pulls back. If you have to have it, I'd put a stop right around 71.50. It's about 7% risk. Okay, so but I'd really start combing the market for some bank stocks. Some regional bank stocks are looking pretty good. And I know there was a period last year where, and I think it was, let's see, where are we? August, kind of this August to mid-October. It seemed like all I was talking about every week was energy and banks, energy and banks, energy and banks, and it made on a nice 3-month rally, and the individual stocks did very, very well. So I think that's where we're at again right now. Something to be cautious, or something to look for. So on your weekend routine, whenever it is you're watching, based on the evidence that I'm seeing, I really think you need to pay attention, because they're breaking out and they're in the top. Right, this is why we do this once a week. See what is moving higher. Right, last week I did talk about energy, and this week they broke out. So I hope you took some action last week. Right, or if you did, you're making money. And we don't know which ones are going to work or not. Right, that's why we take the trades. We treat them all the same. Some work out, some don't. I hope you have a great weekend.